Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Checking the charts with radar. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, checking the charts. Midnight glory. Sanctuary in all its blending. Mind on fire, never ending. Dreams of gold, let's fight. Push on through the endless night. Push on through the endless night. Push on through the endless night.
All right, y'all. What's up? What's up, guys? Woo! 23 minutes of Fed. Let's go. What's up, guys? Welcome to the stream. What's up, guys? All right, we getting ready to roll here. All right, guys, FOMC coming up in a little bit. Damn, my 4 contracts already paying off already. Shit. Okie doke. You know what I'm gonna do? I don't know if I want to play in the Fed. I'm gonna take profit on the. I'm gonna take profit on those 4. All right, big profit on that. That was another 1,800 bucks. What's up, guys? Welcome to chat. Let's go. Chillin'. I'm not gonna do my normal trade I want to do. I'm not gonna long in the Fed. I've convinced myself not to do it. I talked myself out of it. I'm gonna wait for the dip to buy. Fat in 13 minutes, guys. Welcome back to the stream. All right, guys. Close that one trade out. Oh. Oops, I should probably demo a screenshot here. All right, we got FOMC in 11 minutes, guys. All right, let me update that. Oops. Pretty big fucking day today. Got that account up to 10. All right. What's ticker for gold? I don't necessarily know, but you go here, you go to the table, and then the tickers are listed here. So gold will be listed here somewhere. So go to the table and grab it. They're not alphabetical order. Okay, guys. You're ready to roll this. Don't forget, I need you to sign up for the Ninja Trader Arena competition. Big, big, big thing. Hold on. Use our link to do it. It's free to enter. What the heck? Here it is. It's free to enter, and there's a $100,000 prize if you win. You really can't beat it. Our code is here. Everybody should enter, even if you're not going to compete on Monday. You should at least enter because it fills up a slot. And it gives our members that are competing one greater chance to win. But also, you should just enter anyways. It's a fun competition, and you can win prizes. There's the link. Sign up. It is free. Free is good. Free is great. We love free. Be ready. Dump coming. I'm flat. I've talked myself out of being stupid. I traded off of this dip right here back to there and closed out. Is this where risk interval can come into play? 209. Aha, right? So let's mark up about 209. Risk interval from here for where a catalyst will be active. Let's get one step ahead of it. 209 would be 26051. Right there, risk interval green line. And 5850 right here would be at 80, right? These are your catalyst lines in case we do fall. I'm just estimating about there. The credentials for the Ninja Tourney. I just posted the link. You just sign up with this link here. Just sign up. That's all you need to do. Just sign up. Trust me when I say wink, wink, it will benefit you greatly just for signing up. I will. This group will get some perks. We fill up that roster. Just sign up. Trust me when I say just sign up. We got to fill that tournament up with that link to sign up. It's free, so you're not paying anything for it. Also, sign up for the Tradeify Arena Cup and make sure you join Team Rocket Scooter, because when you sign up for the Tradeify, or not Arena, the Grand Cup on Team Rocket Scooter, our team's going to win this contest. Hands down. Hands down. Yeah, there's no reason not to sign up, and it's a one-day YOLO, so you just go in there and trade one day. One of you will luck your way into 100,000 bucks. Will the market move more at 2 or 230? Most of the time it's 230. 1 out of 10 times it's 2. Like sometimes the Fed announcement creates a crazy move, but most of the time it's the press conference that creates a crazy move. Most of the time, yeah. Am I gonna win it for sure? Not the Ninja Trader, no. Ninja Trader is a gamble contest. Whoever happens to get all 6 contracts right wins. You got to trade gold, euro, oil, indices, and you got to trade all of them, get them all right. Then you'll win. You should get in the top couple hundred probably if you're a decent trader trading one thing though. What's my plan? My plan was to have a long into the announcement, but we dipped and I bought and I closed there. So now I'm actually chilling. If the market dips to risk interval move at these green lines, I'm going to buy at 53. I'm going to buy at 80. This is 58, 50. This is 209, about from here at the top. So I'm planning on the market not turning into a catalyst. I'm going to buy the dip here. My trade is to go long here if we dip and go long there if we dip. I don't think the FOMC is going to break the range at first, but Powell talking could trigger something, and I think the press conference is going to give me the move that I want. I don't think the FOMC is leaving this range, but if it does, I'm ready for it. I'm not taking my original long to the open. I bought this dip instead and pocketed that for like 3,000 more bucks, and I called it. I'm going to be trading 3 of the accounts that I have. They're off screen, but I'll show you guys the trades because it's not in a Tradeify, it's in Funded Next. And that's basically it. Speaking of that, let's go ahead and I'm going to grab some trades in these evals because they're evals and I don't care. I'm going to YOLO on the evals though, because I just need to pass as many of these no consistency ones I can before the sale ends. So I'm going to long in 5 of those evals right now. So I'm actually just going to do the long in the evals and pass the evals if it burps up, blow them up if it doesn't. Don't care. I'm trying to pass as many of those things as I can before the sale ends, and then I'll just buy my real accounts here. My funded accounts are here. The Rocket Scooter team on Ninja. It's no, there's no team on Ninja. It's just use this link to sign up. When you are funded, you have 5 max to mini trade legacy account with funded. 10, Christian. It says 7 on the website, but it's actually 10. No consistency on legacy, but only when funded. Yeah. So I'm not really YOLOing these. I'm going to plant 2 contracts on these like a moment for the meeting or for the announcement. It's about a 90% chance, 98% chance that we do get a rate cut of 25 basis points. So the target rate will be 375 to 4, about a 98% chance. We're going to get 2 rate cuts this year. Another one probably in December, but they may do back-to-backs. So we're going to keep financial juice open, listen for the wee-woo when it comes out, and we'll know what's going on. So we're getting a rate cut. It's almost guaranteed. Everyone says we need 3 of them this year, and there's only 4 months to put those 3 of them in. That's it. What Funded X have a consistency rule only on eval Nicholas, not when funded. Oh yeah, 2 minutes, baby. If we get a risk interval, which I don't even think we'll get close to. Oh, that's a 100K day. Look at the cluster pivots down here. Let me show my cluster. We got bull zone, bear zone. I'm extremely bullish this market. Do I just want to take the risk? Just one account. Why don't I take one of my funded accounts in long 3? If I lose 200 points on 3, that's not big of a deal. That's like less than 10 grand. Actually 2. Actually 3. Whatever. Do I want to do it? No, I'm not gonna do it. Resilience is negative. Resilience is negative, but maybe that's just because resilience is negative. Okay, I'm not gonna do it. I wussed out. All right, I'm not gonna do it. No, don't do it if I do it. No, I'm not doing it. I'm not lying. I'm not gonna do it. I'm gonna be a big ass wuss. I'm only gonna do it in these eval accounts. I'm long in these eval accounts right now. 2 contracts each across 5 of them. Just 5 of the evals. These 5 right here, that's it. Everything else, flat. I'm not doing my strategy from earlier. I've talked myself out of it. I want like a big ass, give me that red candle though. I didn't think the announcement was gonna move too fast. Whoa. There we go, we're at 4 now. So we got 25 basis point cut just as expected, and the market didn't move. Just like I thought. It's gonna do nothing. Well, let's see if we got anything. Oh, well, the evals are making money, but probably not a lot. All right, so let's get rid of this. No catalysts today, bye-bye. The evals made nothing really. Well, the evals were up like 1,000 and they're back down. Yeah, so as expected, the market's gonna do nothing. Good. Okay, now we're gonna wait. Let's just all YOLO our accounts to make history. Either way, half of you guys win, half of you guys lose. Am I going to stream the news? Yeah, this was the news. So we had a rate cut of 25 as expected. That's it. We got exactly what we expected. Big short. I don't know, but I don't know what's going to happen, but I didn't do it. I know my suspicion was in case it dips, I'll buy the dip, but I have nothing serious on the table. I just have 2 contracts on these evals from right here that are basically flat. You know, that's just to play those evals. All right, I'm going to be a wuss on these. All right, I don't even care. I didn't get a bump. Let me just take profit. I'm going to close these out. I'm going to trade these on the press conference instead. Let's let this market move around. I only made like 400 in each one of these accounts. This is, again, eval, so that's next. It's just sim. All right, so... or close to 400. All right, there's what it was. There's where it is. Now every account is got something in it. I'm okay. I'm gonna probably just chill on this one. Resilience isn't budging, so I've got my sign right there that we're not gonna move. My big 4 funded are the top 4 you see here. So those are up 23,000. And I'm going to be the world, by the way, I'm gonna be Funded Next's world record payout holder, by the way. God damn, I'm so fucking smart. God, I'm so good at this. The fuck? How smart I am at this. Degen, $700. I know, right? LOL. Not worth it. You don't like breaking coming? Yeah, that's the problem. If you lose 210, it's pretty devastating. I don't think we're going to sell off and crash, but we're going to wait for the press conference. Fed uncertainty about the economic outlook remains elevated. This is due to the tariffs. Inflation has moved up since earlier in the year and remains somewhat elevated. Vote in favor policy was 10-2, with Fed Governor Moran preferring half percentage point cut, and Kansas City Fed President Schmid preferring no cut. So 10-2 is still pretty good. Let's pop that statement out, you guys. Take a look at this one. Ready for some boring fundamental stuff. Let's see if we got it here. Press conference 30 minutes in. 2:30. Committee will carefully assess coming data, evolving outlook, and balance of risk. He's going to read this during the press conference, by the way. The committee decided to conclude the reduction as aggregate securities holdings number 1. This is all about the quantitative tightening. Strong committed for maximum employment, returning inflation's 2% objective. This is the dual mandate, blah, 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 blah. Nothing crazy here. FOMC came in as expected. Financial Juice is parsing that data that I'm reading to you now. And then we're going to move out of the way. So, anywho, I thought it was going to be like a nothing burger. 16th place on the Ninja Trader. Matt, let's go. QT will end December 1st. I don't think that's what I'm reading. Hold on. Let me look this up. December 1st is when it ends, yeah. December the 1st. Oh, wow. That is correct. I am reading that. Oh, well, how about that? I'm surprised it's not more bullish than it is. Yep, December 1st, QT's ending. Wow, okay, that's what they were talking about. Yeah, cool. Well, QE is, I don't know if QE is back, but QT isn't back. Well, I guess you can't be, they could be zero. Quantitative tightening is allowing assets to mature on the balance sheet. Quantitative easing is adding, investing in more assets. Dang. Your second Barbie's Ninja Challenge? Oh, let's go. All right, yeah, not QE yet, but they're probably just, I don't know. Can you be neutral? Can you be in between QE and QT? Is there a zero? Is there a zero? There's a zero, right? I mean, technically it's a zero. No buying or selling balance sheet assets. Yeah. No buying, no selling, just zero. Yeah, neutral. There's a zero. Yeah. So no QT doesn't mean QE. It just means no QT. Yeah. Zero is do nothing. Quantitative chill, bro. That's it. Yeah. They just let them roll. They just let them roll over. Oh, that does make sense. Does make sense. The platform uses Rocket Scooter right now. Okay, so what I'm looking for today is we're gonna let the press conference move this around. That could have been an interesting dip to buy, but man, I don't know. I didn't like what I saw. The announcement came out pretty clean. The ending of QT is not necessarily QE, so it's not super bullish, but it's definitely not a bear news event to have QT ending. It's one step closer to QE, but if I know the Fed, I think QE is not part of their initiative right now. They've been trying to get out of it for the longest time, and we've been out of it for like 3 years. I don't think they're ready to jump back in for any reason, you know? Quantitative nothing. Bum, bum, bum. All right, so this is really boring setup trade. Resilience is negative. I'm definitely not shorting this. Like I tell you guys, the resistances are here. It's gonna have a hard time breaking out to the upside. Now the press conference is gonna come through in a little bit, and they're gonna talk about. Oh, okay. So look at this. On December 1st, they're gonna reinvest all their MBS principal payments into treasury bills. Okay. Cool. So, you know, neat. All right. Okay, so right now, I am still long-minded. I'm not bearish at all. And from here, we're going to wait and see what's going to happen on the press conference. Press conference, I'm going to give me some juice to trade. I'm still extremely bullish on this. I think there's a lot of bears out there that have been waiting to kind of sell off this Trump thing we had the other day. And I don't know. But while we're here, guys, as you know, we do the most giveaways here on the stream of any other stream on the planet. You know, I give away over 1,000 prop accounts a month. How would you guys like me to give away like 20 accounts on the stream today? Just 20. All right. We got a little bit of time. Let's have some fun. 1 billion. Okay, we'll do 1 billion, right? All right. All right, hold on, give me a second. Can we get the likes to 1,000? Bum, bum, ba, da, da, da. Love from South Africa. What's up, man? All right. Alrighty. While we're waiting for the press conference to start, my friends, family, did you, like I said, did you know I will be the funded next world record payout holder? Love me, hate me, whatever you may, but you can't doubt me. The accolades on my resume. Type funded next again. I'm clearing the list. Type it again. A year ago, I won ETF's large month-long day trader championship, no YOLO straight trading, first place. Month-long trading one account. This year, I won Pat Whelan's BDH tournament, first place. Last year, I attempted the Robbins Cup, got top 5. Got bored with it when I found out all the gurus didn't enter that said they were going to enter. I wanted to beat some gurus, so that wasn't worth my time. But this year, somebody joked that I should go in at the last minute and win the Robbins Cup, and I actually decided I'm probably going to do it. I'll probably go jump in and make an account because it's only 300%. I bet you I can win the Robbins Cup in 2 months. Well, I'll do it just to do it, just to claim the prize. Like I even care. But Tradeify Arena Cup, Team Rocket Scooter, we're going to win that. Ninja Trader Arena Cup. I'm gonna try to win that, but probably not. It's a YOLO contest. Tradeify Grand Cup, we're gonna win that, and I'm gonna win that. We're gonna try to win that. At least our team is gonna have the winner on it. I feel like Rocket Scooter is gonna be the best performing team out there to show that we're the best trading community. Anybody that has algorithmic software, indicator software, giant trade room, giant whatever, who's important in the space was invited to bring their team to trade. Doesn't, you know, if I win, it's whatever, but I want our traders to be ranked above everyone else's traders to show that we're the best. Anybody who was relevant to the space was invited. Anybody who was a proven trader or a proven educator or proven algorithmic software was invited. If you weren't invited, you're nobody. So everybody is gonna be there. So we're competing against all the somebodies, and I want you guys to show off how good y'all are. It's like The Voice, like the TV show. I'm gonna sit there as y'all's coach, which would be fun, and I want my singers to out-sing their singers. That'll be fun. Anyways, just being goofy about it. Y'all ensure it'll be so much fun. You go to the Tradeify. It's free if you have a Tradeify account, period, and you bought a prop from them one time. It's free to enter. It'll be on your dashboard. If you haven't, it's $35 to enter. So you might as well go buy a cheap advance or something, get a prop account out of it. All right, type in FundNX, you guys. FundNX Rapids are the fastest payout in the West. The two, well, I guess now three best value accounts on planet Earth. FundNX Rapid, it's less than 100. MyFund Futures Core, less than 100. ETFs, brand new, end of the day, $57, whatever that one was. I think $57. The new, I guess, value account trend with some of the majors is really cool. FundNX Rapid is the quickest path to payout of any prop account out there. It's 4 days to payout. 1 day to pass, 3 days to payout. That's it. FundNX Rapids are our most used code as well. Yeah, dude, if you can't do this one, it's totally fine, but I'm giving you guys a hint. Please, 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 please sign up for the Ninja Trader Tourney. I'm going to want to show off how many people we can bring to the table, because my goal with Ninja Trader is bigger. We went in talks for them to sponsor our streaming community with Ninja Trader and TraderVate Prop. And with that, I hope we can get our tools into their platform. Like TraderVate will have Ninja Trader's liquidity maps in it. That'd be great. I'm trying to get them to open their API so you can trade your prop accounts here. Now, that's a long stretch, but as the relationship gets strong, I'm going to get some trust with the new owners of the brand and convince them how many billions of dollars we can make them by opening up their API and letting them see the bottom line. My team is already on it. So let's show off how important we are by everyone signing for that free tournament. I want them to show, you know, we get in all of our socials 50,000 views a day. So let's bring 50,000 people to the table. I'm going to turn it around and benefit you guys greatly. And if you're in the boot camp, you know another perk I'm going to give you if y'all all sign up. If we hit a certain quota of signing up, I'm going to donate like 50 more prop accounts to give away, whatever it ends up being. So that'd be kind of cool. You got 72nd place, 71st place? Bro, let's go. Congrats. All right. All right, spin on this wheel, baby. We got press conference coming up in 14 minutes. I'm going to spin the wheel. Actually, we'll just do the drawing. I don't have time to spin the wheel 15 times. 20 times. All right. 10, 9, 8, 7, 6, 5, 4, 3, 2 and a half and a quarter. 1. All right. Okay. It's done. Okay. Hey. Pick. All right, guys, stop typing. Stop typing. Let's have some fun. Give me some kind of accent that you'd like the results printed in. Should we go pirate? Should we go dog language? Australian. All right. All right, whatever that's going to end up being. All right. I just picked something. Tony Montana. Oh, that actually would be pretty cool. All right. All right. That would actually been fun. All right. I can't speak in an Australian accent, but here we go. Here's all right, mate. Here's 10 random names, served up Aussie style. Kev Smith, absolute legend on the charts, mate. Trader Ken, bloke's got more pips than a bag of prawns at Christmas. Mad Maxi, Bear drink 'em wild one, that one. Shawnee P, always trade him while tossing another snag on the Barbie. Oh, these are so bad. These are really bad. All right, I'm just gonna read the rest of them. Azaria Dean, Gino Max, Wave Chappelle, Mr. L Sessions, Jules, and Lord Cutie. All right. God, that crikey. That's some horrible. That's horrible. All right, Kevin Smith, Trader Ken, Mad Moxie, Shawnee P, Azaria Dean, Gino Max, Wave Chappelle, Mr. L Sessions, Jules, and Lord Cutie. All of you are now one fun to next rapid account richer in your lives that you didn't have before. Congrats. Winners of the contest. We'll have some more later while we're waiting. Winners of the contest, go to my Discord in the link in the description below. Go to the contest channel located in admin name Slack, send them a message. Take a screenshot of your YouTube ID and let them know that you won the account. Have an account with Fun to Next already, send them that email, and then we'll get you your accounts ASAP. Yes, yes, yes. Dude, these cookies that they made with my face printed on them, my friends are all texting me in a group chat. One of the girls was like, I'm eating Matt for lunch, and then she posted a picture of the cookie. And then everybody, because we printed cookies with my face on it, I docked it for my birthday. So everybody is sending me pictures of them eating my face for lunch. So like, this girl, she packed her boyfriend a lunch. She's like, I guess I'm eating Matt for lunch today because I packed my boyfriend gourmet sushi and all I got left is Matt, and showed a picture of the cookie. I had cookies with my face on them. That's funny. They're still a couple. They were pretty damn good though. I actually liked them. All right. That was a non-event. Market's not moving anywhere. I do have potential green line support. Now, again, I'm gonna have to move this down off the peak in case we create an event, which I don't think we will. Keep in mind that 210 is a really strong pivot. If we break 210, it falls really rapidly. You guys know what yellow lines do. For the most part, it should try to hold, but all day today, resilience has been deteriorating. So our stocks are likely to be filling the gap. Nasdaq is likely to fill the gap. And because of this, I'm not long and I'm actually flat on my accounts. And I'm very worried that we do tip over today. I'm not holding longs right now. I think the market's going to try to sell maybe. The problem is Nasdaq at 210 is the tipping point. If you lose 210, it's bad. I took profit earlier and just closed out, and I'm pretty chill on the side. Got all my accounts are green, which is good. Everybody's sending me cookie pics. Matt's the daily snack today. I think show us the cookie. I think I ate the last one actually. Hold on, maybe I get some in here. Yeah, I know I ate the last one because I'm a fat ass. No, they have these, like, there were these square cookies that, like, iDoc took some very embarrassing photos of me. Like, one of them was me like this, like sleeping, and so that was on a cookie. One of them was like snuggled up in my like heated Snuggie. I look so lame, like it's hilarious. And then there's another one of me with my Oppenheimer costume, smoking a pipe. I was Oppenheimer one year. Nobody knew who that was. I hang out with too many party people. Although I do have a lot of intellectual friends. The Halloween parties I went to, they were all my party, my club friends and stuff. Friend's like, yo, dog, what's up? Who are you, man? Oh, bro, he's Indiana Jones. Let's go. And I was like, that's right, Indiana Jones. First time I explained my costume, went to this huge costume party. My friend who owns like, 50 rapid hospitals, urgent care things, hosted this huge party. Ran out this whole club, invite only. There was like 1,000 people there. Went in this place. Everybody there was like, who are you, man? I was like, oh, I'm Oppenheimer, right? And they're like, who? I was like, Oppenheimer, like from the movie? Like, no, I was like, nuclear bomb scientist. No, man, I'm not familiar. It's like, I won all these Oscars. No, not familiar. No. And I'm like, no, I'm Indiana Jones. Oh, there you go. I'm the guy from, and one guy was, are you the guy from Jurassic Park? I was like, yeah, that's it. I'm Sam Neill from Jurassic Park. But it wasn't even an Indiana Jones costume. It was straight up, it was Oppie. It was like high riding pants, like baggy freaking 1940 suit pants, like so baggy you could barely see my shoes, with suspenders, the pipe with the fedora. Come on, man. That costume cost me like $40 from a thrift store. It was pretty nice. Yeah, Dr. Grant. Yeah, it's almost the same look. Yeah, I like completely wasted costume. Nobody got it. Everybody, and then she was Barbie, so we were like Barbenheimer, although we were a year late on Halloween because it was the trend the previous year to be Barbie, but we were lazy. We were like, let's just do last year's trend. So even put together, we were like Barbie, Oppenheimer. You guys remember how cool this was a year ago? And people were like, oh, I think I saw the Barbie movie. It's like, oh, no more. It's no longer relevant. It didn't work. So it didn't work. This year, we're the Dallas Cowboys and Cowboys cheerleaders. So that's what we are. All the girls are cheerleaders. One of the husbands is a referee. I'm gonna be a football player. You're dressed as Ken's lower half. Maybe I should dress as Donald Duck's lower half and just walk into a place without pants on. Be like, who are you? And I'm just like, I'm Donald Duck. And they're like, sir, I'm gonna call the cops. You need to get out of here. So what is your costume? Oh, so you suck at football. There you go. Yeah. I told them, they were like, let's be the Cowboys this year. I was like, great. All I need is a bucket and I'm going to fill it up with some water and it'll just be a bucket of tears. And that'll be it. People will get it. They just see me walking around with the bucket and they'll be like, oh, Dallas Cowboys. Hey, that's it. How'd you guess? How did you guess? Well, you have the bucket of tears. That's right. Just carry a trash can with you. My Cowboys ain't been doing so good. Poor boys. I'm a Cowboys fan. I'm not a Texans fan as much. I was an old school Oilers fan, and then I went to all the Oilers games I swear as a kid that I could go to. When we had time, we would go. And then when the Oilers left and Texas came in, I was, kind of into it for a little bit. There was some pretty good, team pride because JJ Watt was like a hometown hero and he made the team kind of have some hometown pride. But dude, they just sucked ass. Like Carr, he was bad. Matt Schaub, he was good, but the problem is they got cock-blocked by Tom Brady. Every time they made it to the finals, to the playoffs, is against the Patriots, and Patriots beat us both years and completely humiliated the Tech. You can just see like the expertise in their offense versus our defense, man. We just look like such a new team out there that lucked into the playoffs. And a couple times we were good. Which is exciting, but you can tell like we were just, it's like a high school team playing a pro team, man. It was almost embarrassing to watch those playoff games. Those years that we did okay. Tom Brady's a GOAT. And yeah, and like in our defense, Tom Brady's probably one of the best players that ever lived. And, he just knows how to outsmart people. And dude, they made our team look so amateur. It was a very bad beating. It wasn't just a bad game. You could see like the difference in like how he thought versus how our team thought. He was just like, it's like 4D chess watching him play. So I was actually very impressed on how he just found a hole in every part of our defense. Like the the defenders were all like running in circles around each other. People were always open. I mean, it was like pretty bad. But yeah, I've always been a Cowboys fan since then, you know, since the early days of being young. Emmitt Smith, Troy Aikman, those are the days. Yes, sir. Those are my dudes. And before that, it was Warren Moon, Earl Campbell. Like when I was a kid, like that was the dream team right there. And poor Warren Moon and Earl Campbell, two of the best players to ever play the game, stuck on the Oilers that were really never any good. Moon, I say, and I always tell people, is one of the best quarterbacks ever played. He was so good. He just didn't have the best team. He didn't get as much credit as he deserved, but he was a fantastic quarterback. Romo was good. I did like Romo a lot. He was really good. Smith and Sanders. Oh yeah, the old days. We had some good sports era in the 80s. We had Warren Moon, and Campbell, and then it got good with basketball in the 90s because we had Hakeem and Clyde came back together again from the U of H days when they used to play together at U of H. And then we won those back-to-backs, 94, 95. Rockets, hell yeah, baby. And the Rockets have been doing good lately, but granted, you know, new era basketball is not as legendary as old era basketball. The fact that the Rockets won in 93, 94 against freaking, you know, Jordan and Larry Bird and all the players back then, that was a time, that's where a win actually meant something. This like legendary time to win was 93, 94. Ooh. That's how you know how good the team was. Press conference starting now, baby. Let's go. Let's load it up. All right. I will turn it on so you guys can hear it through my stream if you'd like.
Good afternoon. My colleagues and our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although
NBA
some
sucks now.
important
It's not as good as it used to be.
Due to the shutdown, the public and private sector
You know when the Rockets won their game that tied the longest record that the Bulls had? I went to that game. I think it was like the 16th game in their win streak.
Conditions in the labor market appear to be
My brother, my dad, and me went to that game.
and inflation remains somewhat elevated.
That was the most legendary game in Houston basketball history.
Employment and inflation. Today, the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point.
Okay, so listen to Powell talking about projection in the future and the questions people ask about what's going on in the future. Let me turn it up.
I will have more to say about monetary policy after briefly reviewing economic
I don't think I can
developments.
turn it up any louder. It's max volume.
Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer
No, he's supposed to spam. Like, here's the role of the channel, guys. If you want to get my attention to do something and it's important, it's honor system, you're supposed to spam my name so it shows up orange so I see it. He's doing the right thing. I give y'all permission if y'all need my attention to do something.
The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force.
How would they know that I brought you the Ninja Comp? You click my link.
And labor force participation, though labor demand has clearly softened as well.
You click my link when you sign up.
Although official employment data for September are delayed,
remember, we're trying to show off how cool we are to Ninja.
Both layoffs and hiring remain low.
I told them I'd bring them 10,000 people.
Households' perceptions of job availability and firms' perceptions of hiring difficulty
use that link. I just posted it in chat.
In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months.
I'll interpret what he's saying to you guys.
Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal.
Which is 2027.
Estimates based on the Consumer Price Index suggests that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well.
So core is excluding
These
food
readings
and
are higher
energy,
than earlier in the
which is
year,
more of
as
discretionary
inflation
spending
for
rather
goods
than
has picked
necessary
up.
spending. So they separate the two out
Disinflation appears to be continuing
to
for
see if inflation's
services.
hitting the working class or
Near-term measures of
everybody.
Inflation expectations have
Food and
moved
energy
up on balance over the course
hurts
of
the
this
working
year
class
on
harder.
news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided
Nice
by
bull
our
run up
dual
on here.
mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the
I'm not
target
chasing
range
long
for the
here,
federal
guys.
funds rate by a 1/4 percentage point to 3.75% to 4%.
Hey, if you got that long, that looks good.
Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation.
It should have worked,
A
RP.
reasonable base case is that the effects on inflation will be relatively short-lived.
Use the link
A
if you even
one-time
sign up for the
shift
Ninja
in
Comp.
price level.
If you already signed up, I'm gonna let you
But
sign up
It is also
again.
possible that the inflationary effects could instead be more persistent.
Your fourth,
And
Nikos?
that is
Hell
a
yeah,
risk to
dude.
be assessed and managed.
Congrats,
Our
man.
obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are
Quick
tilted
salt
to
after the press
upside,
conference. Yeah, I think so.
and risks to employment to the downside. A challenging
Well, I'm gonna peek out
situation.
the yard real quick.
There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance.
I said
of
I'm not
risks.
long in this. Look
We
at that.
continue to face two-sided risks. In the committee's discussions at this meeting,
All right,
there were
so
strongly
209
differing views about how to
from the top.
proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
76.
Policy is not on a preset
Dallas
course.
is 76.
At today's meeting, the committee also
58.
decided to conclude the reduction of our aggregate securities holdings as of December
84.
1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative
How long
to
is
our administered
75?
rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as
December
the size
cut,
of
not
our
for
balance sheet
sure.
declined and warrant today's decision
That's
to
what he was
cease
saying.
runoff. Over the 3.5 years,
Differing
that we've
views
been
about how
shrinking
not
our
to
balance
proceed?
sheet,
Oh,
our
maybe
securities
not
holdings
December
have
cut.
declined by $2.2 trillion. As a share
Wow.
of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase
75.
of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve
This is where a
liabilities,
catalyst
such as
happens. So I
currency, keep
usually like to
growing.
take a trade at the cat active one.
We will continue to allow agency securities
that we
to
don't have a
run off our
catalyst to
balance
finish
sheet,
out
and
the
we'll
day.
reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock
Mm-hmm.
of Treasury securities, thus furthering the normalization of the
My
composition
210 is fire.
of our
Bro,
balance
is this
sheet.
so good, right?
The Fed has been assigned two goals for monetary policy: maximum employment and
Let's tell you
stable
guys, man, yellow
prices.
lines are dope.
We remain committed.
Y'all learned that
to
yesterday or a
supporting
couple days ago in class. Look at that
maximum
yellow line
employment,
today.
bringing our inflation sustainably to our 2% goal and keeping longer-term inflation expectations well anchored.
Yeah, the market just like
Our success in delivering on these goals matters to all Americans.
210, man.
We understand
Good.
that our actions affect communities, families, and businesses
How close are
across
we
the
getting?
country.
103?
Everything we do is in service to our public mission. we at the Fed will do everything we can to achieve our maximum employment and price stability goals.
I'm glad it didn't
Thank you.
long, like I
look
said I was going to do.
your
I'm
questions.
perfectly flat. Love it.
Nick Tamaros of the Wall Street Journal.
Hand that mic over to someone good.
Market pricing has assumed a rate cut is a foregone.
The hell happened to the audio? What?
A further reduction in the policy rate at the
there
December
it is.
meeting is not a foregone conclusion, as I've just said. So
He sounds. I hate
I
when
would
he
say that needs
answers
to be taken on
questions
board.
so properly.
We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension
All
between
right, so
our
cat active
two
line is
goals,
5850 from
we
the top.
have,
I've already measured about where it
strong
is.
views across the committee. And as
If I think that
mentioned,
this is a really
they were strongly different views
non-significant
today.
move, then I
And
think we'll end
the
up
takeaway
right about
from
here.
that is that we haven't made a decision about.
Why does the audio keep cutting out? He's saying that they don't know if they made a decision about December. Strongly differing views on the meeting about how to proceed. So I think traders are going to absorb that news very poorly. I think I might be able to get a scalp off of this, but I'm definitely out of the way trying to like YOLO this to the long side. You guys follow? But we're going to grab it right at 75. Get a little closer. All right, there we go. Let's add some. Let's buy some. All right, let's grab it. Let's let it run. Fuck yeah, fuck yeah, fuck yeah. Let's go. Come on. No catalyst, no catalyst, no catalyst. Let's go. Hang in there. Let me double check the math here.
Policy, which we had been holding at a I would say modestly, others people would say
209
moderately
from-
restricted level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at
283 to
neutral, because
209.
One of them's calling for you to hike. and one of them's calling for you to
276.
cut. So if that
That's pretty much it. All right.
balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management.
This is a catalyst, so we break the screen
I would
line and
say
keep
the same
going.
about today, sort of the same logic. But as I mentioned, going forward is a different thing.
I'm Claire Jones, Financial
Damn, it's moving around
Times.
so quick.
Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments.
Don't lose
were
that
brought
green
up.
line.
Is there any consideration, for instance, of the investment we're seeing?
I'm logging
AI,
in two of my
the
accounts here.
generation of household wealth through
But
rise
it's
of
going to be risky and volatile on the
stock
edge here. VIX is
prices
above triple B for
related to
sure.
the AI.
BVIX above 100. It can get really
I wouldn't say
nightmarishly
that's
bad here, so be
that's
careful.
a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. You know, I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So
get a run.
They'll forecast faster or slower progress on one or the other. And
That's
they'll-
tough. So I'm betting on the market not falling apart, but this green line is it. It's
Some will
tough.
be more averse to inflation.
Yo, the press conference keeps cutting out. Oh well. Keeps doing this freaking like rainbow fucking colors here. Well, Pal's done. I don't know. Well, let's get some music going. What on earth is going on here? Oh, it's selling pretty hard. Come on, let's get a
is
pop.
That it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets
S&P has
are related
fallen to
the US
dynamic
Treasury
overnight hedge pressure
issuing
at
more
68.79.
debt?
You know, that could be one of the factors, but The reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, what the place we're trying to reach. What we said for a long time now is that when we feel like we're a little bit or a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities.
Oh, fuck yeah, let's go.
Grow. So this happened.
Let's go.
Some things have been happening for some time now, showing a gradual tightening in money market conditions. Really, in the last, call it 3 weeks or so, you've
I just made
seen more significant tightening. I think a
on that
clear
pop.
assessment.
Let's let it go, baby.
That we're at that place.
Keep ripping.
The other thing is,
Keep ripping.
The balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice.
Let's go.
And so there's not
Let's let it ride.
a lot of benefit to be holding on.
I took
to get the
profit on
last few
exactly-
dollars because, again, with the balance sheets, the reserves are going to continue
That
to
80
shrink
points,
as
I'm
non-reserve
holding just
grow.
two
So,
contracts,
there was
runner
support
now
on
and
the
one
committee,
account.
as we thought about it, to go ahead with this and announce effective December
Along the
1,
cat
we will
line,
be,
I've got a
freezing the size
runner
the
of
balance
two,
sheet. And
just
the
two
December
contracts to
1
let it
date
ride. That's
gives
it.
the markets a little bit of time to adapt.
Let's go. That pop was lovely. Fucking
you,
lovely.
Colby
Now I
Smith,
got a
New
runner or
York
two just in
Times.
case it holds
So much
hedge
of the
pressure.
rationale
That's
for
it.
cutting
Just two,
interest
keep it
rates,
light.
Even as inflation moves away from the 2% target, seems to be, that
Just
there's these
trading on the
mounting
edge of that
downside
cat. I
risks to the
love that
labor
trade. I
market.
love that
But if
trade.
those
I
don't
love that trade.
materialize, and the labor
Okay, let's go.
market
Hold
either
on.
stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about
These are, I'm going for
underlying
Fund Index World
inflation
Record
and the
payout.
possibility
That's
of
it.
second
I want to get
round
100K today, dude. That'd be so
comparison?
awesome if I can get
In
it.
principle, if you were to see data that suggested that the labor market's strengthening or even that it's
56.
stabilizing,
Let's go.
Now,
Now,
that would
again,
certainly play into our
these are
decisions going
evals, so
forward.
about only
and we
48
do
of that is
we
funded.
get some data. The labor market is a place where we get, for example, we get the state level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings. And we'll get lots of survey data. We'll get the beige book. and things
Effective
like that. So
December
we'll have a
1st,
picture
quantitative
of what's
tightening
going on in the
is
labor market.
ending on December
And,
1st.
the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe
You vote one
maybe
to 10 out
continued
punchable as
very
pal
gradual
space.
cooling, but
He's
nothing
become,
more than that.
like,
so that does give you some comfort.
more annoying as the years have gone by.
But
I
if
used to
this
think he was
shutdown
very
lasts a while
cool.
longer and you don't have that data in
Now he
hand,
just
I'm
seems like a
wondering
big-
how that
like a big
hinders the
wuss these
committee's
days.
ability to assess the state of the labor market and make.
I always
the
thought he
right
was one of the better
policy
Chad
decisions
Fair people that
and
we've had.
Also, how much is that factoring
Chad
into
Fair people.
the debate about
Chad
December?
Fair people. That would
So,
be a great name for somebody. Fed
we
chair
get-
people.
Like I mentioned, what we get in the labor
Hi.
area,
Hey,
we get
ladies. How you
some
doing? My name
data
is
in
Chad
inflation,
Fairpeople.
Some data
How's
in
it going?
economic activity, and we'll have a picture of what's going on. We also will have the.
You think
beige
Trump
book
wore him
again.
out? Yeah. Jay Powell's never
I
cool.
would say we're not going to be
From
able to
my
have
standards
the
of cool,
detailed
I'm like the
feel,
nerdiest guy you know, so my standards of cool are
things,
not
but I
that
think if
not
there
good at
were
being cool
significant
standards.
Or material change in the economy,
Chad
one
Fair?
way or another, I think we'd pick that up through this.
Chad Fair person
So,
sounds
in
like the
terms of how it
person
might
that would
affect
shove Powell into the
December, it's
locker
really
in
hard
high
to say.
school.
December's, the meeting's like a
Fed
6 weeks away.
chairperson. I'm
We just
Chad
don't
Fair
know what
person.
we're going to get.
In the locker. Don't hurt me.
If there
You know what I
is
mean?
a very
You sound
high
like that
level
kind of
of
guy.
uncertainty, then that could be an argument in favor of caution about moving, but we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had two dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop at the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample.
Okay, my two runners should go. Hopefully,
that'll happen
see if it
for a
works.
time, but not a tremendously long time. We don't know exactly how long. But at a certain point,
these pops have been
you'll wanna
great.
start
Resilience is just completely toast.
Start gradually growing
I'm gonna probably
to keep up
on that
with,
next pop to
the size of
close
the banking system and the
at
size of the
2160
economy.
on
So
the
we'll be
start here. I'm
adding
probably, you know what I'm
reserves
gonna
at a
do?
certain point. And that's
I'm gonna flat out the two.
last point.
I don't
Even
like it. I'm
then,
flattening the two.
We'll be
Flattening the two.
We didn't make decisions about
my
this
runner I've
today, but
closed. I'm absolutely
we
out.
did
I'm
talk
flat,
today
flat, flat,
about
flat.
the composition of the balance sheet. And there's a
I'm not
desire
convinced this
that
doesn't continue
the
selling.
balance sheet be right now. It's got a lot more duration than the outstanding universe of Treasury securities. And we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding Treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that,
Well,
which is
maybe I could have held on to that runner.
translation
Oh, well.
into what we look at, which is PCE
This is all
inflation.
crazy gambling
But
at this
we
point.
can still make a pretty good assessment.
You got
of
your
what that
50%
will
on
be.
Top Step, but let's
When
go.
we get PPI, there
All right,
might
I closed out
be
early. I
some
could have gotten the last 30
adjustments,
points, but I didn't. I wussed
directionally,
out. I only had a runner of two, so I'm good.
It was a little softer than expected, and we always break it down into the three components. So basically,
She
you've
for
seen
sure
goods
eats hot
prices
Cheetos for breakfast.
increasing, and that's really due to tariffs.
I love hot
And that's
Cheetos.
due-
I could eat those
that's
all day long.
Compared to a
This
longer
message
run trend
slacks
of very,
what is
very
going
mild
on.
deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services. And we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say.
All right.
One is that
I got a challenge for you
inflation
guys.
away
As I
from
mentioned yesterday in
tariffs
boot camp,
is actually not so far from
if
2%
somebody were to
goal.
accurately
We
code
estimate
a
that
yellow
people have
line
different
or
estimates of
red
what that is,
line,
but it might be 5 or 6
indicator, because it's a very
tenths. So that,
challenging
if it's
problem, and I don't
2.8,
have time to
then,
get to it. We're going to get to it eventually.
core PCE,
But I told
not
you guys
including
here,
tariffs,
if you
might
were
be
to
2.3 or
code a
2.4
red line
in
and
that
yellow
range,
line finder,
something
as
like
you
that.
know
So
the
that's not so
technique,
far
and you
from
were to
your goal.
automate it for me, I will buy
So
it
that, we look at that, and
from you
the thing about tariff inflation is
and make it
the
worth
base
your while.
case
Like, I'll
is that
buy
it
your
will
code
come,
from you
and it probably will increase
and
further.
incorporate in a rocket scooter.
But it is that
Like,
it will
I'm
be a
sourcing this
one-time
out,
increase.
but as an
And,
open challenge,
we've
instead of
been very
hiring somebody to
focused
make it,
for all
it's
of
almost
this
like a
year
challenge.
and
There's a
making sure that
prize at the
that's
end of the
case
line.
and thinking carefully about
If you can automate impact red lines, run linked red lines, yellow lines, and ultimately the anchor point would lead to automated catalysts,
we don't see that.
I will pay you for it. Python would be the preferred language.
We're watching this very carefully. I think it's
I
not
tried making the
case that
base
we're
code with
just assuming
ChatGPT.
that it's going to be a one-time inflation. We understand fully this is a risk we have to
This is going to
monitor
require a little bit more thought than
With the
ChatGPT,
stubborn
because if you know why, you know
services
why.
inflation, what are some of the
But if
things
somebody
that
can
the Fed
tackle the
could do
challenge
to
and accomplish it,
address
I thought it'd be fun to let the
and
community get
especially
involved.
when we're seeing potentially
If you guys
labor
decide to team up and do it
supply
together, split it in teams, whatever,
So
the winning
to the-
team will get a
The
big prize. I'll
stubborn
buy it from
services
you.
inflation that you
Oh,
mentioned.
service inflation, yeah. Well, again, the part of services inflation that is, that is.
Like, it's just one of our indicators. If you can create the code for me, I'll buy it from you guys.
Of non-housing services. And,
It's almost
overall,
very hard to
that's
do.
just something that we expect will come down. The non-market part of it should come down. It's largely.
You have access to
reflects
Rocket
higher
Script?
stock prices
Coming out
and,
soon.
I mean,
This next
financial
year it's coming
services,
out.
that are imputed rather than actually paid is a big part of that. But also just, we think policy is still
Brett,
modestly
thanks for
restrictive.
playing your tune. You're having it mastered right now, so send you the pro version. Excellent, man.
Cooling economy. That's
Brett, dude, we were jamming to your music earlier.
Because
I'll send everybody your story. You have a lot of people here that are like
restrictive. So
fans of all the shows that you wrote for.
I want to say though, we're absolutely committed to returning inflation to 2%.
Brett's the guy that was
If you look at
writing
longer-term
music for Sons of
surveys or
Anarchy
market
and
pricing,
Lucifer
you
and
will
some other
see
shows
that-
and stuff.
That's a credible commitment.
Man, if only I would've held for
There should
longer.
be no question that's where we're going.
There's a little craziness. Now we're tapping that 210. I don't know.
Great, thank you. Chris Rugaber at Associated Press.
What are the requirements for that script? Yeah, I'll make it tonight.
Infrastructure right now, as you know, and wondering if the existence
It's a
of such
very
boom,
challenging
would indicate that rates are not that restrictive after all.
thing, and
could
our
further rate
developers are
cuts at this
fully
point
tied up,
perhaps fuel an
and
excess
you guys
level
know
of investment
trading, and it's
there
something I
or,
was thinking to myself when I
market
said it.
bubbles? How is the Fed thinking about that?
All right. I'm tired of listening to Pal. He's boring me. Okay. So what I'm telling you guys is that you understand trading, you understand what the yellow and red lines are. And so if you were actually able to solve the problem for me, it requires you to solve the problem. I can do it manually. There's some subjectiveness to it, but if you come up with a clever way to have it make one that's accurate enough, we'll buy it off your hands. So it could be like a weekend or a week or two of work that might net you guys 10 grand. I feel like that's a good price or something like that. 10 G's. How's it derived? Well, I mean, you have to be in the boot camp to know how it's derived. I think that's a good going rate for, like maybe a week or two worth of work for somebody putting their head down. So you'll have to figure out how to do it. I kind of know how to do it. I just have not sat down to explore how I would do it. How about a Rocket Scooter lifetime sub? I mean, if I pay the winning team 10 G's, you can buy whatever you want with it. Your devs will charge you 15K. Yeah, I'm thinking like, that's a couple months worth of dev work right there. You have to join the boot camp to know how to calculate the lines. Yeah, we want to automate yellow lines, red lines, catalysts. And so how to find an anchor point? Well, number one, how to find a red line, yellow line. We have a manual way to do it, but we need to find a way to consistently do it automated. The manual is a little bit of subjective analysis from your pattern seeking abilities to get exactly the right price right or close enough within a few ticks of error to find a specific thing we look for. The green line is the catalyst active line. Ladies and gentlemen, tell the person that asked what the green line is, what that green line distance is, risk interval. And I tell you guys, the magic of what we do here that blows everybody's mind is the ability for me to come up with that pivot exactly off the event. One thing you learned today, students, was that I pre-drew a risk interval before it happened. Didn't I? Didn't I draw it before it happened and have that red line sitting there? And I made $25,000 in 4 minutes. All right, so let's go right here. The magic of the risk interval. Isn't that crazy how before an event, see, you're learning all the tricks. The longer you stay here, you'll learn all the tricks that I have. What do? Is I bet that the market's not going to nosedive as a catalyst. And boy, did I get that move exact to the penny, didn't I? Right off of that candle right there. I drew it. And I pre-drew it just by estimating. I estimated from about here and had those lines waiting. So what did I bet for? That it wasn't going to be a catalyst that's going to crash the market any further, that at least it would bounce to try to rescue itself and stay bullish. On the go. Thank you. I drew that and then I bought it. And then while I was sitting here, anytime we get a big green candle like that, that's all I'm looking for. A quick 40, a quick 50. Now that's gambling to go further. I try to get the balance. It's going to attempt to try to hold. And holding through this, I would just have to have balls of steel and not care. I could have gotten another 100 points. That's not how I trade. I'll edge on the side of the catalyst. I'll get the bump, trim down, hold a runner. And then I closed out the runner, but I would have held it to there and closed out. CME span, baby. I reverse engineered CME's program that sets margin requirements for clearing firms. And with that, I come up with these green line pivots that I drew on the chart. I reverse engineered CME span's parameters back in 2015. And my entire online trading journey career as a leader or a Discord owner or whatever started then when I showed this trick to people 10 years ago. I've been doing this trick for 10 years, trading oil this way, trading everything this way. When there's an event and the market plunges on that candle, I've got this green line ready to go, and I can either bet, if I think that news is not bad enough, then I long exactly at the candle to bet that we stay on the same side, that we don't turn into a catalyst. If you break this green line, it's going to tumble into a crash. So I say, is the greater bull market going to crash today? And I go, probably not. So I longed at that green line. It's so exact, as a matter of fact, the algo gives you that number every day. 58.25 S&P, NASDAQ 209. This is 209. This is 58.25 to a T. Now, you guys can remember, as the market was moving right here, I quickly scrambled to draw those lines where they were, and then I bought that dip where it landed. It's also yesterday's open. Coincidentally, it's always going to be something, but it's close to yesterday's open. It's going to be somewhere. It's going to find liquidity somewhere, right? The market's testing risk intervals is pretty common in a catalyst and in an event to test to see if where the market's finding liquidity. It dove really quick to test for buyers. Anytime you make a step change in futures, it's going to move that distance, right? Would it work if it's written in TradingView and you can link the output data as automated data injection value? It can work in whatever language you're writing it in. We will take your code and convert it to RocketScript. This one can be done locally since it's using just candle data. We don't have to do it on the server. If it's local, we'll do RocketScript. If I determine it has to be server side because of calculation limitations, then we'll write in Python on the server. Do I really have to join to get the variables? You have to learn the technique. The technique's a manual. It's a manual drawing technique and identification technique that we like to be automated. It requires almost like an AI sort of analysis in real time. It's not a discrete method. If it was that, I'd code it myself over the weekend. It's not something that follows discrete rules. It's not like if there's 2 red candles here and growing green candle here, do this. It's not like move this exact distance. You're trying to identify something that's more along the lines of a pattern. It's the only thing that we do that has subjective analysis. It's identifying buy and sell imbalances, but using the charts. And there's a way that we do it manually that's fairly exact. The green lines, as you see, is a testament of being exact. The goal of one of them is to locate the anchor point, which is exactly this gray line I just drew. Where the actual move started, you're going to identify this move right here. Not the top, not any rule of candles, but exactly where the move started based on the order flow. How do you determine the risk interval? I reverse engineered CME's programs by reading a bunch of patents they did. And SPAN is a program that the CME Group creates margin requirements from reportable positions of institutional traders that report their positions. So they take that distributed risk, run it through a bunch of scenarios, come up with a number, and they say this is the margin requirement for futures. I took that margin requirement, I reverse engineered their logic system, and I backed into the parameters that they use that show how the risk range is distributed under a certain SPAN risk interval, which is why I call it a risk interval. And that risk interval is an expected range every time the futures market needs to move abruptly to test liquidity. It always moves a distance that I hacked from the CME Group. And my program reads their website every single day and grabs those numbers that they publish. And the bot scrapes the site, pulls the numbers, throws it to the server, does the calculation, and this table updates once a day. This works on every day, all the time, every time. You about ready to show you what the risk interval does? This started my journey in Rocket Scooter of building shit that made sense. My job was to find out how the structure of the market actually works. This exact distance is this box right here. And every time margin requirements will change, this box will change. Can I show you something? Because once I show it to you, you're going to see some pattern you never saw before. You see every time the market becomes suddenly volatile, do you guys see the distance it moves right here? Y'all see that? Top to bottom, it's inside the box. How about here? You see the distance it moves? Top to bottom, it's the distance of the box, right? You see here, top to bottom, distance of the box. You see this? Top to bottom. You didn't know that has to do with margin requirements. Well, the distributed risk. Here, top to bottom. I mean, you can do this like all day long, top to bottom. That kind of V-shaped low to high move, low to high, low to high, low to high. It's literally all throughout the trading day. I can calculate this distance here is the same distance the Fed just moved. Exactly this distance, this box. And the moves try to stay contained within that box as much as you can. As you see, low to high, high to low, high to low, high to low is trying to make step changes of that distance. It's based on margin requirements. It's based on where liquidity is. And you can actually zoom out and see how many of them there are. And I identify them just to show off. Low to high, low to high, low to high, low to high. This is the same distance we move on the Fed. Here. Yeah, it's pretty brilliant. I know. Thank you. People tell the CME Group, here's where we're trading here, 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 and here. And they go, okay, this is where the liquidity is. There's shorts here and longs here, and about 58 points is about how far the market can move and still be liquid. So therefore, if there's a step change, the futures market is going to move that distance to search for liquidity. And I always long at that spot to bet that doesn't fall apart. That algo spits that data out every single morning, by the way. Apart from the goofy antics on the stream, we are a serious team of mathematicians, fairly accomplished ones. Here's how you get our software. That's it. The box distance is not consistent. It's a daily calculated distance. However, it's only updating J when the margin requirements change. Equities products like S&P, NASDAQ, Russell, margin requirements only change a few times a year. It's not often. Commodities products can change once a week, every couple of days. It depends. So the cool thing with equities products is that the margin requirement very rarely changes. They don't move that often. So with equities, that box distance pretty much stays the same most of the time, which is kind of nice. The yellow line involves the MR. Yellow line is usually far from price that MR changes daily. So by the time price changes, not 90% liquidation value anymore, as MR has changed from the day that we set it. Oh, okay. So it's base key trades, right? K trades. It's based on the margin requirement at the time of the imbalance, not the current margin requirement. Good question. So if you have an imbalance on a day and the market keeps trading and the margin requirements change between then and now, your yellow line is still calculated off the old one. Good question. Yeah. I think that's what you're asking me. The margin requirements are in queue. You can get from CME's website from SPAN 2 section. Yeah. Holy wow, you definitely found the right spot. Trade flows. Yeah, you're in the community of Math nerds and engineers, man. Our stuff was designed to find volume pivots that are predictable. They all have a little math behind them. Most of them are exploits. Took me about a year to crack the code, mathematic code of how they calculate margin requirements. So I convert a margin requirement to a range of liquidity. That's it. Man, what a nice trading day for some of you guys today. Those long pops are pretty good. I'm flat though. I'm happy with the 56 or whatever I made. That's hella good today. At the end of this week, I should be at $300,000 with Funded Next. And at the end of like, I think 9 more days, excluding this day, I could take the whole thing out and I will be the world record payout holder with Funded Next. The world record is currently 155,000 a single payout. If I wait day 30, I'll get 300,000. $58 points all the time. Every day at 5:30 Eastern, we update this table and publish the data right at market close. So we publish this data every day. My bot reads the CME website, grabs all their publication data, runs it through the algo, and then updates this table on the server. And so in between Globex open and close, we update this table. And every futures contract will do the same thing. You can line it up anywhere. 209 is NASDAQ, 5850 is S&P. And it falls exactly. It's how far the market will move when it needs to make a step change to track stocks move very quick. Futures has to get ahead of stocks because it's pricing in futures, right? The future. And so it's the balance of risk. If I were like, the example is very easy to understand if you think of it like this, right? Pretend that there's 2 market makers, period. That's it, okay? And one market maker says, I'm going to buy at 7,000. And then they buy at 7,000. They buy 1 million contracts at 7,000. And then another market maker said, I don't agree. I'm going to sell at 7,100. Well, I'm buying at 7,000. And they all have market orders there, right? They've all bought whatever, but say they have positions there. This one is short, this one is long. So wherever market is trading, the liquidity providers themselves told you that they are 100 points apart from each other. As long as price is staying stable inside of this range, none of these market makers are doing much. They might be liquidating a little bit left and right to like satisfy buying and selling. But if the market were to go this far, this person's in trouble and markets will move very quick. They might stop out or quickly hedge. Same thing here, it might move quick. Your buffering of buying and selling are massive large positions between where they are. Now the example here, I gave you 2 market makers. They basically announced with their positions they report, your entire system of providing liquidity is 100 points apart. Because I'm buying here and they're selling there and that's as close as we'll agree. The CME group goes, aha, okay. So the average trader is probably going to mirror the same thing. Liquidity is about 100 points apart. Okay. So then they say, okay, well, let's run it through the algo. Okay, here's the calculation. Margin requirement is this. Higher the range, higher the margin requirement. And this example is just 2 market makers in 1 position each. There's millions of positions that are analyzed. But we're going to talk about the whole portfolio they own is analyzed, by the way. Let's pretend it's just those 2 trades. So now if the market's trucking along and a news event happens and stocks are selling really quickly, stocks are selling, and the futures are going to get ahead of that and move a distance. Well, when market was trucking along, it's considered liquid. A sudden burst is considered illiquid, right? So illiquid market is going to try to find where buyers are going to be. So if you were like managing the show and you were like, well, I need to find where buyers will be, but I have no idea how to price this thing, you kind of have a blueprint of where the market makers are kind of at. If you're liquid here and the market's selling very quick, the buyers are 100 points away. So if I was controlling the market, I drop it 100 points just to test where the buyers are. Because, well, the market makers told me they're 100 points away from the sellers. And there are the sellers right there. So let's test that same distance in the live market to see where the sellers are. that is the risk interval. So I take the margin requirement and backtrack that range of testing, and it's how far the futures move on a step change to look for liquidity. You will see that bump so often. So they basically handed you like the magic number. And I know everybody jokes around like ICT has the algo of the market. This is the algo of the market. It's a process tracking system where the futures are tracking the stocks. And when the stocks move, the futures move in a step change that's a function of the margin requirement. So that's it. And once I figured out how to do it, I mean, I'm a code breaker, I'm a coder, I'm a mathematician. It's very complex. Yeah, calculating with calculus. And well, I mean, yeah, right, over the CME published data. That's all we're doing, yeah. Calculating the distance. It's not a linear problem, so it's not like they handed me numbers and I can calculate it. It's unfortunately a nonlinear iterative problem. Those of you that understand mathematics, there are infinite degrees of freedom because you're solving simultaneously for multiple parameters. It's like the equation a plus b equals 5. With no further information, has infinite solutions, right? Because you have 2 handles. A could be 1 and B is 4. A is 2 and B is 3. Infinite solutions. So to properly solve the problem, when people are like, what's the equation? It's not an equation. It's an iterative process that has to converge to a solution. There are multiple solutions, but only one of them is applicable. So it's a math problem. Yeah. So anyways, I give you guys like the number and it's just a range. Like when the market dives like that, anytime it dives, like always draw that distance. And if I don't think that news was that bad, I buy the dip. Now, not having a rate cut in December as a maybe was bad enough to drop it. But I don't think it's bad enough to crash the market. We have some counter news with QT ending, which is pretty good. Yeah. Name other show that teaches how to think about trading like Matt does. We goof off a lot of the times, but I'm like very passionate. Like the market is a puzzle. It's a mechanical machine, like a plane with the autopilot with computer control systems on it. Those things are consistently applied. The green line is a perfect example of it. So my thought is, you know, how much can we derive from this and what's consistent? I use this buy at the bump, and you guys have been to the boot camp know that that's where the catalyst line is. I'm just betting that this didn't break us into a catalyst. This news wasn't that bad. So I bet that we'd stay above the green line. Not that we'd rally from there, but just get a quick, 50, 60 points off of it and call it a day. Not really try to guess, but just buy the dip. If the market was bad and we would have lose that green line, it would be a devastating crash. Catalyst, and if you move that distance and keep going, what happens if you move that distance and don't retrace half and you keep going, the market gets overrun. The liquidity sort of is like hard to find, and then it just completely tumbles and volume goes chaotic. So when you stay on that same line, the same side of that line, volume tends to decay nice and quickly and easily. Yeah. It's a good trading day. I'll take it. 56 today. Now, again, full transparency. The top section, these are all evals here. These are all evals there. With funded next, I've passed 30 of the no DLL accounts, and they're all ready to go. So the other ones I'm trading are funded at the top and funded at the bottom. Funded and funded. And these are going for the world record payout, 300K, where I should be by the end of the week. These guys are Tradeify straight to funded. I'm about to go live with Tradeify. I'm about to get my $80,000 in payouts since I started in March. It's a little slow. It's like slower than probably. I took a slower path with that. I had a whole strategy with Tradeify to blow the consistency the first round, to take it slower, and then build a buffer so that the later rounds are easier. That was actually a pretty cheap strategy to pass. It just took a longer. So March to October, March, April, May, June, July, August, March, April, May, June, July, August, September, October. It's took me 8 months to make 70K from Tradeify. A little slower, But I mean, the whole goal was, will that strategy work? And it's definitely going to work. It save a whole lot of money than trading from payout to payout with no buffer. I thought it was a pretty genius strategy. Just took a little bit extra time. If I recalculated it, where would it be now? RP, if I recalculated what? The margin requirement? Do you have any predictions for the night sesh? This is pretty bad selling. I think the night sesh is not going to be so bullish. The stocks are selling off. Resilience is way negative right now. The stocks are being dumped. But the thing is, the resilience is negative even before the Fed. So all day today, stocks were destined to sell. I don't think the overnight is going to be a bull ride back up, but we'll see. Stocks were selling all day. Here and here, right? So even before Fed, stocks are already trying to sell. Fed just sort of like catalyzed the move further. It's going to keep going lower, I feel. Yeah. Julian, what's up, man? Congrats on killing it today, the past weeks. Thank you so much for your streams. Really appreciate you. How am I doing? I'm doing pretty good. Thank you. Thank you. So these, so the funded next, I'm pushing really hard to pass as many evals as I can before they get rid of those cool rules. My belief is that they might axe the whole no DLL, no consistency, whatever, and then go to normal rules, right? Because they're doing sort of like this loss leader campaign. But when they do, I've got 30 past evals sitting there, in my inactive place. So if I happen to blow up one of these accounts, I just signed the agreement. I got another live one. So I have a stockpile of live accounts or funded accounts ready to go, like 30 of them. So I've spent, you know, maybe 20 grand, 10 grand or whatever to get there. But now I can just trade for free with Funded Next until they make a live program, and then it ruins the whole thing. But as long as they don't have a live program, I can just no risk trade with these guys. I'm gonna shark them for millions of dollars with infinite well, 30 backups, not infinite, but infinite backups, baby. 30 is good. 30 is good enough. I shouldn't blow up 30 times. My Tradeify strategy? Yeah, sure. Is inactive a euphemism for your keister? Nah, but that's funny. All right, here we go. Tradeify strategy. Here's this. Okay, straight to funded. Let me teach you guys something about a lot of these prop accounts. Tradeify straight to funded. Make $9,000. They have 3 different tiers: 1, 2, and 3. First one is 9,000 profit target. Take out 35. $6,000 drawdown, by the way, 6,000 DD intraday. Or sorry, total drawdown. Make 9,000 without losing 6,000. Take out 3,500 on your payout once you get to 9,000. Now you're left with 6,500 in buffer. That's it. And so payout number 2, you start with 6,500 and then you need to make 4,500 with it. So now the new profit target is 65 plus 45, which is 11,000, right? I'm sorry. Yeah, 11,000. And again, is that right? Wait, is it 4,500 plus 9,000 minus 35 is 55. Oh, that's right. I'm stupid. I knew that math was off by 100. I promise I'm smart sometimes. Okay, 55. That's right. 55 is what you have here. 55 plus 45, which you need to make, puts you at 10,000 profit target again. Okay. And then you take out a $3,000 payout. And remember, the whole while you bust at 0. This first account, you bust at 6,000 loss until you get to your first payout. And then it's a $6,000 daily drawdown that's always there. Okay. The daily drawdown is always there, by the way. Or sorry, the daily loss limit. Sorry. End of the day loss limit is always there. Okay. Now when you go to tier 2, once you take out your $3,000 payout, you're back down to 7,000. And again, it repeats. Now you need to make 3,000 this time. So the tiers change. This one you got to make 9. This one you got to make 4.5. And this one you got to make 3. And then every payout after, you just need to make 3,000, 2,000, 3,000. So your balance goes from 7 plus 3, you need to make 10, you're back to 10. So in case you didn't notice, what Tradeify did, and if you didn't do this math, you didn't see it, is at most, if you're the kind of trader that's like, whew, I got my payout, okay, take it. Okay, whew, I got my payout, okay, take it. Prop firm stats are designed to squeeze you out between payouts 1 and 2. Statistically, only like 0.005% of people make it to the second payout. Those are horrible odds. But if you keep making it, what Tradeify does is it shuffles you back to the start every time. This clever design means that if you're like, okay, make a payout, take it, make a payout, take it, make a payout, take it, you never have a balance that's that far from zero. As a matter of fact, each time you start with a new payment, you only got $5,500 left, and $7,000 left, and $7,000 left to blow up, because zero is the blow up point at this point. So every time you take a payout before you get your next one, you are barely at the starting line again. With $5,000 a buffer, $7,000 a buffer, you can't navigate with that. One bad day is going to blow your account, right? So I noticed that every time you would take a payout, you basically start over from the start, right? So what I did was, when Tradeify said $9,000 with 20% consistency as your payout, I was like, nah, I'll make 50, 25 to 50. So what I did was I was trading $5,000 plus days each day. At 20% consistency, your trades have to be 5 times, your total balance is 5 times your largest trade. So I was making like 25K buffer, like purposely blowing the consistency on purpose, 50K for the first payout. And so what happened was, at the start, I was trading like 10 NASDAQ contracts, like as max as I can go, to get 5K days, 5K days, 6K days to make a 9,000 target. By the time I made it to day 5 at 20% consistency, all of my balances were about 25 to 50K. I blew up a lot in there. I say a lot, maybe like 20 times, but I didn't blow up any time after. And I've made it to payout 11 and 12 on some of these accounts. See, when you bounce to starting point payout, starting point payout, starting point payout, you are in their system where they squeeze you at payout 2. For me, payout 1 just took a long time to get to. And then now each time I take a $3,000 payout from a 50K account, I've got $47,000 still in the account for payouts 2, and then I just trade it like normal. Imagine making the payouts now $600 for 5 days to hit your consistency with a $47,000 buffer. I will never blow up and just walk to the finish line slowly. Imagine trying to make $600 with a $6,000 buffer. Okay. Imagine making $600 with a $40,000 buffer, $25,000, $30,000 buffer. So the difference is I pushed hard at the start to build whatever buffer I want to purposely blow consistency, payout 1, and then payouts 2, 3, 4, 5, 6, 7, 8 have just been a cakewalk. Imagine me holding a trade and taking $5,000 of drawdown, and then it bumps up and I make my $600. It's easy mode after that. I'm leveraging the cheapness of the prop accounts. Most of you will make a payout, blow up, make a payout, blow up, make a payout, blow up, blow up, blow up, blow up, blow up, payout, blow up, blow up, blow up, payout, because you're so close to the starting line every time you take a payout. For me, it was account, blow up, account, blow up, blow up. Okay, cool. Buffer. We're rolling. Good. 25K off the list. Only took me about 20 accounts to build that buffer in all of them, whereas most of you might blow up hundreds of times over the course. I got them all out of the way on the first payout. I'm purposely trading them hard. I'm walking to the finish line. Look, everything I trade is clever and different. I know it's weird. That's my strategy for that. I had a strategy for beating the BDH tournament. I have a strategy for everything. I think differently than most people, but Pierre has said life is on easy mode after that. Your run up to drawdown ratio is so small at that point. You can't blow up unless you're just an idiot. It would be almost impossible for me to lose $50,000 to try to make 600 bucks. I can just waltz to the finish line with a couple micros with pretty much no risk. And I learned this trick because some friends of mine were doing this with Apex, except for Apex, it was even better. And Apex doesn't let you do this, but people were like YOLO trading Apex accounts to put hundreds of thousands of buffer in them and their PA accounts, and then applying for payout and having Apex deny the payout, but purposefully getting denied because they didn't care. Like they're like, nope, you don't get a payout because you YOLO'd this and made 100K in a day. And they'd be like, oh, I'm so sorry. I made 100K today. Gee golly, that sucks. And then like, okay, but you start over for the next payout. And for some reason, Apex started your stats over. You had a $100,000 buffer and then you just walked to the finish line and then took your $100,000 on payout too. Early days of Apex, tons of people schemed Apex that way for $1 million payouts until they changed the rules. So that's how it works. And when I told that strategy, there were some yokels on Twitter that were like, but you're giving away $200,000 of sim money. And I was like, no, I'm not. It's not real money. Sim payouts are not real money. You're forfeiting all that money, bro. And like these paper traders out there, all they think about is paper trading. And that like these sim funded programs are like an infinite money glitch for paper traders. It's not real until it hits your bank account. This is the mechanics of making the payouts better. The balance that sits there doesn't matter. It's not real money. Do I have a strategy for D's? For D's what, Ryan? I got the BOFA strategy. You ever tried the BOFA strategy? So I got BOFA D's nuts, baby. On your chin. D's market strategy. Okay, so listen. Yeah, the person on Twitter, when I was telling my strategy, like 9 out of 10 people were like, that's extremely genius, Matt, because what they see is over the course of time, I spend less money blowing up than you guys would, all things being equal. Because having more buffer increases your likelihood of surviving the account. If I'm walking along and Trump tweets something and I take a hit really quick, I'm taking a leak, not paying attention, I didn't blow up the account. Shit, it dipped very quick and came back. Whereas with $6,000, you probably blew up the account. So the account can survive a lot more just statistically, right? So it becomes easier to make your further payouts with a buffer up front. Anytime a firm has consistency in subsequent payouts, build a buffer up front. This is a prop firm hack. Dude, I teach people how to hack prop firms all day long. BOFA strat only allows for 2 minis, the left mini and the right mini. Although everyone at Rocket Scooter, our nuts aren't small. We got fucking balls of steel the size of bowling balls here. They're maxis, ain't minis. I have strategy for Fund Next. Any account that has a tiered payout system with consistency, you can burp the consistency purposefully on your first payout, and that's it. Fund Next Legacy has a 40% consistency. You're not going to care about it. 40% doesn't matter. 3 days. Legacies, you're trading for big fat payouts anyways. It doesn't matter. You're not going to try to get your payout in 1 day and just walk to the end. Now, the no consistency rule they have now on funded means that once you go funded with these, you can YOLO your first payout and then like your first day trading, which is what I'm about to do to show you guys this strat. With these new accounts I bought, I'm going to trade them differently. Now, I can only trade so many funded accounts at a time, so they're on the back burner. When I get to them, I'm going to try this one thing where I'm going to go out there and just full port, maybe blow up, full port, not blow up, and then full port and then build $30,000 profit 1 day. And then trade the minimum, which I think is $100 a day for like 4 more days, and then take the 30K out, close the account, or take half of it out and just pay myself that way. But in all honesty, that's the strategy you can do. I don't need that little money. What I'm going to do with these is just trade them for real, just to keep going until they stop paying me. So the idea is 40% is not that bad. With Funded Next, you're really just pushing for like big account growth with the legacies. That's the point. But the Rapids, they're 1 day to pass, so it doesn't matter on the eval side, 3 days to pay out. No matter what you do in the Rapid, your payout is fixed. So there's no benefit to like building such a huge buffer. You just don't need to build enough like 10 to 1 against your payout. Like if your payout is what, $1,500 and you build like a $10,000 buffer, then you're solid, you know? ETF stands for Elite Trader Funding. So with Rapid, I think you can do the same thing. I've never traded the Rapids yet, so I'm not sure if you can build a buffer. Somebody here that trades the Rapids, can you do this with the Rapid accounts? I've never done them yet. So. What size is my eval and Funded Next? I buy the 100K legacies and the 50K legacies usually. I'm split between 250s and 200s right now. That's the 4 that you see. So you can do the same, Leo said. Okay, you can do the same on the Rapids. Same thing. Building a buffer makes the rest of the job easier. To go to your subsequent payouts, just put your buffer in, yeah. On the Rapid, after 5 payouts or 30 days, you can take 100% on the Rapid, like uncapped payouts after day 5. Is the dynamic hedge pressure there at the cat line 2 on NQ? Yeah, and MHP dynamic was also at the cat line as well. See, as you guys are starting to notice, the more you learn some of the stuff that we teach, you start to realize there's some weird symmetry in the market. You see how everything is sort of lines up? It leads me to believe there's some master thing out there that we're kind of finding pieces of. See how far we moved up today? It dipped to the hedge pressure, which is calculated with options, right? Same thing. NASDAQ was there. S&P fell right to overnight monthly, right? Like the market is just a symmetry, man, inside of itself. Pivots calculated independently from different reasons. One of those is options. One of those is margin requirements. Come up with the same levels, right? The market's just sort of like this weird symmetric balancing act, man. It's crazy. When prop firms crack you when they realize you fail eval in the final stage to live. Hold on. I don't understand the question, Fixer. When you fail the eval on the final stage to live. I don't understand how you'd fail the eval. Fixer, don't, but what, I mean, can you retype it? Well, prop firms crack when they realize you fail. I don't understand your question, but I still don't understand it when you mean funded. I don't understand. When you fail the funded on final stage to live, you're not. Oh, so that you don't go live, like to prevent yourself from going live? Okay. Let me think about that. So if you like basically fail on purpose to prevent going live, a lot of the prop firms, they have a catch-all for that, which is a total payout. So I have some inside information for you guys about Funded Next, because I'm in with most of these prop firms and like what's going on. When they have a live program come out, they will only have $100,000 lifetime max, which is why I'm trying to get my payouts as much as I can now. The live account isn't announced yet. The live program is in their FAQ and it's coming at some point, and they're trying to build it out now. So everybody was like, what is Funded Next doing? They're losing so much money. There's got to be a catch. Well, here's the catch. They're about to have a lifetime cap on payouts down the road, which means while it's uncapped, I'm pushing as hard as I can to make big fat payout. Then I can make a $200,000, $300,000 payout, and then nobody will ever be able to do it again. And then when they close that door, I'll be #1 forever. Because you won't be able to take out more than 100K payout. As long as I am the record holder when the door closes, I will be the record holder until the day I die. How about that? I'm telling you, dude, I play 4D chess everywhere I go. Everywhere I go. Nobody will ever beat me. That's like 5D chess. So when the actual door closes and they come out with the live program, it's rumored, well, it's in the FAQ that there'll be $100,000 payout cap total on, or like lifetime payout total on sim, and then they move you to live, which is very similar to Tradeify. You make 80,000, they move you to live. Now, if you fail the live, they might put you back into the system. I don't know if they'll let you. Tradeify, it's rumored that when you fail live, you can go back to sim. ETF, when you fail live, you can go back to sim. And so on Funded Next, hopefully when you fail live, you can go back to sim and start over. And then we will conquer the world. So hopefully I can lock in the world record and then nobody will ever be able to beat it because it will be impossible to beat it in a single payout. Can I repeat the Tradeify straight to funded strategy for 50K? Yeah, my goal, so my actual goal was to have, like whenever I had to make the $900 for each additional payment, I wanted to have like a 20 to 30 to 1 run up to drawdown to run up ratio. So like to make $900 per trade. I wanted to have like $25,000 to $30,000 in it. That would be a 30 to 1. Yeah. So I'm trading 2 100s and 2 50K funded X legacies. It's split between those 4. You challenge you in chess, your rating is 2600 with engine. 1500 without. We probably would be on the same page. Well, when I was a kid, I was a 1500 elo. That's about as good as I ever was. And I haven't played seriously in a while. I just play with my son and he's pretty good. So it's a challenge to play my 7-year-old, but I probably couldn't hang with the 1500 elo these days. I'd probably get smashed. So I definitely play you though. One of my friends is like a 1600 right now. He's also a trader. I don't beat him when we play. He's pretty good when we played. So yeah. Does My Funded Future allow you to go back to eval after blowing alive? I believe so. Yeah. I think so. Tom Hall, who hardly as loud. Yeah. So I mean, yeah, it's hard to get live, right? But let's just imagine this, right? Live account is just like that carrot that they dangle that nobody really gets. For most of you guys, you're going to be fighting in the sim funded world for a while. And the live, don't even consider the live accounts whenever you're trying to make your judgment call as to which prop is better. Live account applies to so few people, it shouldn't be part of your decision-making process. Like the nerds at Top Step always argue, well, we have the better live account, blah, blah, blah. Hold on. Hold on, my mom's texting me. But you have to really think about that, right? When firms are always saying, well, our live program is better, the live program doesn't apply to pretty much anybody. So you really should plan what value prop firm brings to you up to like the first or second payout. How much ROI can you get on your first payout? How many failures it takes and whatever. I always tell people when you're planning on comparing a prop firm, like this one is twice as expensive, but the other one you fail twice as much. Okay, well those are equal. If it's the same prop, one of them's twice as much, one of them failed twice as much, though they're equal, right? But when firms are like, well, our live account, you can have this, and these are the rules that are better. It's like you never get there to really matter for the price you're paying. So think about how much you pay and think about what you get on the first payout and how long it takes to get there and basically gauge prop firm value just to that point and compare them side by side. If you're good enough to go live, don't go live. That's the best part. I always tell people that. If you're good enough to go live, fund yourself. Why trade a real money account with someone else's money and have a split? The only upside to that is it's their money and you don't feel any sort of way by losing it all. If it's your own money, it's going to hurt and be harder psychologically, yes, but they're profits. But like if you can go live, you're good enough to go on your own. You don't need props at that point anyways. I tell people that. Live should never really be part of your consideration when when like analyzing which prop is better than the others. That's just what they do to like bait you, like to dangle the carrot so that you think it's better. And you're looking at something you won't probably achieve. 25K fund and next accounts. I don't trade those, but I would say on NASDAQ, I think people here that trade the 25Ks don't even go over a mini. They go like micros. Trading a prop account is an income tax on it's taxed like income because it's 1099 wages. From your payouts on props, it's not futures profit, no. What account size do I go with funded next? I go with the 100Ks, the biggest ones, because they have the biggest scalability. I can trade the biggest contract size with those. That's the only reason I do it. The best value of funded next is the middle one, the 50Ks, because it's the best drawdown per cost ratio. You're getting the best bang for your buck on drawdown size. If you're losing a lot, the middle one is the best tier. But if you're going for grand slams like me, the bigger one gives you a few more contracts to trade so you can hit it harder. Like me, I don't care about losing money or losing a lot. I don't care about saving a little bit of money by going the middle tier. The middle tier will save you money if you're bouncing between a payout, maybe two, and then blowing up. The middle one's the best way to go, the 50K. But I don't want to limit my contract size, so I went for the hundreds. And I also have some 50s, but mostly the hundreds. The negative res matter on the catalyst trade. It didn't matter on the catalyst trade, but it definitely didn't apply upward pressure to prevent the market from moving lower. We could say all day today, right? The stocks were just trading down to the downside. And as I told you guys earlier, right, that the destiny of the index is to match where the stocks are, right? And with negative res right here, we can all see that the index sort of made its way to the bottom of the box. And that's why I'm not buying for a big rally up in the close. And S&P was kind of the same boat, right? S&P was like rallying up here with negative res. That's why I got out before the Fed. I didn't do that trade I wanted to make. Remember I said I was going to long and then long again. And I decided to not take that long at the last minute. I was like, I'm going to wuss out. That's mostly because of this. I didn't think we were going to get that bump. And I got out of the way and then the market fell. And then I took the bigger trade I said I was going to do. But I actually avoided taking that small one because I didn't think we were going to get the bump because resilience sort of scared me at the last minute. I think it contributed to the event. The event was just the event. And then the market just responded to the event. Glad to hit earnings. What's up, Dan? 420 on the day. Let's go. Yeah, and then we have Dan brings up a good point, dude. We have earnings. I think that's gonna be like the bigger mover, right? Than the Fed. I mean, this like maybe we might not get a rate cut in December drop. Okay, whatever. You know, that shook the market a little bit, but I mean, you know, QT's over in December. And that's a good news, I guess. And then earnings, I think it's going to be the real big catalyst. Boot camp today. Yes, sir. Boot camp today. Great trading day today, you guys. That was incredible. Popping those runs at the bottom there. Good stuff. Good stuff. Am I longing tonight? I won't know until the hedge pressure data comes out. I'm going to tell you with this action, I don't think I'm going to make a decision. I think I'm kind of going to, I feel like my luck is about to run out. I mean, guys, it's like 8 weeks, man, of just haven't lost an overall day yet. Like I've lost tons of, you know, trades and accounts and whatever, but overall I've been green every day for like 8 weeks. It's been crazy. I felt yesterday when I took that final trade yesterday that my luck is running out. The overnights are starting to get a little more chaotic, I feel, and the market's getting a little more turbulent, even last month. And earnings coming up. I don't want to, I think there's gonna be a lot more variables. I kind of just want to probably do daily sessions. Unless we open and fall to like hedge pressures like I have been, I'm probably not going to try to do anything at the open. I get a little nervous around earnings. It's too many variables. Morning, stocks move in the morning, stocks move in the afternoon. The overnights are going to be kind of like random. I saved you from buying the Fed Q&A dip too soon. Hey man, that's all you. You guys are learning. I love it. Yeah, I'll take the boot camp. You're going to learn all of our stuff that we teach, you know. The dollar per class boot camp. Can I post the development requirements in Discord? I will today after boot camp, yeah. To take one nice position and start small and scale in. I usually do a little bit of like taking a good position right at the level. That's it. I don't really try to be in a trade other than I get my level and I'm done. I don't try to like sit there all night and trade all night. So I'll have an alarm set at the level that I want unless I'm longing like right at the open. And then when I get that alarm set, then I just log in on my phone and make the trades, or if I'm here, make them here. I don't try to like work a position or day trade or scalp trade. I'm mostly getting a position, and then once I'm in, I set my stop, set my profit target, and then I just leave. And it's all automated. You're third in the contest, Nikos. Let's go. Dude, look at this. NASDAQ ripping up right now. On MOC. Wait, where's my mouse? There it is. Yeah, that was pretty nice. Whale. Look how beautiful that was. Ripping. Yep. All right, speaking of that, guys, I love y'all. I'm gonna go and run downstairs in the 20 minutes I got between now and boot camp. Check out on the turf. They're finally laying down the turf, so I'm excited to see that. We'll catch y'all later. See y'all in boot camp. Thanks for tuning in. And y'all have a great day.